It is Wednesday, October 28th. We are 3 hours into trading. Good morning, traders. We've got a bit of market selling today. You can see on a 5-minute basis this large gap down. Typically, you're going to have a couple of different patterns that form off of this big gap down. One is you can instantly bounce and then roll over midway into a gap like this and then test that low and finish probably in the last 2 hours with a decent move higher. The other scenario is a bearish trend day where the market gaps down and you've got instant follow through to the sell side. This is an indication of very, very strong selling pressure. We have a 1OP bearish cross right here. I am short the SPY, S&P 500 right now. You can see how we got this bounce right here, tail above body, tail above body. This happens to come into play right at the 100-day moving average, and you can see how the price action is softening. I believe we're going to see continued selling for the rest of the day. We may get a bounce very late in the day, but it won't come until the last half hour or so. I'm expecting heavy selling here today, folks. I'm sorry to say, but we'll go into the daily chart and I'll show you why I believe that. We'll put up the major moving averages. The 50-day, the 100-day, the 200-day are all points of interest. You can see the 50-day moving average was breached a couple of days ago and we closed below it. Here you can see this long tail above body, and we are right on that 100-day moving average right now. If that level fails, we do have another support level right here on that low, which is approximately 320. So that would be our next line of support. And then below that, we have 318 and ultimately the 200-day moving average. So what the heck is going on today? Why all this weakness? Well, as I've been telling you, from this long red candle right here, that was a week ago Monday, there were two scenarios that could play out, and this was a pivotal point. It's important that you're able to pick out these very, very key bars. So, right here, the rubber meets the road. We've got two scenarios. You have a nice rally, prices get a little overextended, you've got a little bit of a pullback. This could be a bull flag formation. And if it was, this bar right here would need to finish on its high, breaking that little downward trend there, and then we'd have a chance to rally up to the all-time high. The second scenario that could play out is that this is actually a lower high double top. In that type of scenario, you get your little retracement here, and then the market tries to get back up to this resistance level, but before it can do so, it gets smacked down. Now, this price action on Friday wasn't too daunting for me. I was willing to overlook it. But when I saw this bearish candle last Monday, I knew we were in trouble. And look at the market try and rally the next 2 days, Tuesday and Wednesday. Both days, the market tried to get above that opening price, and in both cases, the market closed on its low. So now we get a little bit of a rally the last couple of days in here, but we still can't get above the halfway point of this red candle. That's resistance now. Then it didn't take long for the market to really start showing its colors. And here you can see Monday's price action. We closed below the 50-day moving average. Yesterday, we couldn't get off the deck. Today, the market is absolutely getting hammered. So on a technical basis, here are your support levels. 320 is a support level, 318 is a support level, and the 200-day moving average is a support level. You should watch all of those. I believe today is going to be a bearish trend day. I think we're going to establish a new low, probably if I had to guess, I'd say maybe around the 324 level. We'll see how the day plays out, but I would expect to see continued selling into the election. So, what gives? A stimulus bill or the prospect of one before the election was keeping buyers engaged. It was also making short sellers very passive because they didn't want to start selling short and then have the market rally on that news. Now that we know there's not going to be a stimulus bill before the election, that bid has dried up. Those buyers are gone, and there's natural selling pressure. Asset managers are reducing risk into the election because there could be a lot of uncertainty. We've got a lot of mail in ballots that need to be counted, especially in key states. I was listening to a voting official in Pennsylvania. They are expecting the results to be contested regardless of which candidate wins. That's going to drag the process on, and that's going to delay the stimulus bill. Who knows? 2, 3, 4 weeks. And it's not just the presidency that's in question. We also have lots of Senate and House races that also will play a role in all of this. So, a lot of uncertainty. We had earnings come out yesterday on Microsoft. The numbers were excellent, but the stock pulled back. Why? Could be because valuations are stretched. It could be because there are antitrust regulations that are being considered. And right now, all the major tech companies are in a virtual conference with Congress. That could also be weighing on these stocks. A lot of uncertainty. Haven't even talked about the coronavirus. Cases are spiking nationwide. They're also spiking in Europe. Major metropolitan areas are in lockdown and they're looking at restricting activity even further. So we've got a lot of negative headwinds blowing right now. If you're a swing trader, you know this because if you've been watching my videos for the last couple of weeks, you know that I've said be in cash. Cash is king. We have no reason to have positions on right now. We're going to wait for this market pullback. We're going to wait for the elections to run their course. We're going to wait for that clarity, and that will set us up with a buying opportunity because regardless of which party is in control, both of them want a stimulus bill and they recognize the need for it. So we'll have that playing in our favor. And also, after the election, the market has a tendency to rally 6% on average over the course of the last, I believe, 100 years or so. So once the news is known, the market should be able to find its footing. Now, the exception to that was in the year 2000 during the Bush Gore presidential election when the market did not know the results for weeks. And in that instance, the market did not like that backdrop. So we could be in for a little bit of a rough ride here for the next few weeks. We'll see. What the price action is telling me right here and right now is that there is some pretty intense selling pressure. So if you're going to day trade, you really should try to day trade on the short side. I'm going to leave this 5-minute chart up so that we can watch it. Like I mentioned, I've got a short position on right up in here. I'm looking for the market to pull in, test the low of the day, and probably break below it. So this would be a nice, strong decline. Got a fairly weak bounce that runs its course in an hour, and then the low should be tested. We'll see what happens. Let's take a look and see what we've got in terms of some shorts that might come into play. I'm going to look at week after earnings and see what's up here. These are all stocks that have been selling off after posting earnings in the last 2 weeks. And I'm going to see if I see anything interesting there. TSM, IBM, super weak. That has been a nice short, big gaps down each and every day while the market's been pulling back. Netflix, I'm just looking for a really good short that I can give to you that might work not only for today, but possibly even an overnight. FDX was one that I played last week, and in all honesty, I lost money on this trade. And I did swing trade it. I had a long upward sloping trend line right here that was breached. And the stock bounced the next day. I had to close it out. It did the unexpected. But today you can see how now we've got a clear gap lower. I think FDX, when you see a chart like this, where the trend is extremely well defined and the price action is super tight, you want to make sure that you're drawing your alert lines. If I drew it right now, it would already be violated because of that gap down. I think FedEx has a chance to go down to that 50-day moving average at least. Yes, great stock, great company, going to be doing gangbuster numbers into the holidays. People probably not going out to malls, they'll be shopping online. FedEx will benefit from that. I agree with all of that. But don't you think that's already priced in? Look at that rally. I do. So I think there's some fluff here, and that upward sloping trend line has been breached. For anyone that's been getting long, FedEx, there's a time to take profits. When might they do that? Well, they might do that when an upward sloping trend line is breached, and that also would attract short sellers. So I think that FDX makes an excellent short in here. Let's see what it's done today. And you can see today it's been floundering around. It's still pretty much near its low of the day. Didn't really get this big bounce like the market did, but it also has been able to find support before the market did. So we'll see what happens with FDX. I think this is one that you would want to watch on a swing basis. It tends to make pretty decent opening moves and then it tends to settle down. So yes, I think that one could work very well. Nike, very weak today. Let's take a look at that daily chart. Here you've got a gap higher after earnings, and now that gap is being tested. Not quite yet, though, as far as shorting. So I'm going to draw a GTC alert there for my own benefit. When that's violated, it will have a tendency to fill in this gap right here, and I know that I'll have some decent opportunities on the short side on a day trading basis. I'm going to just continue to click through and look. This is what I do every day. I'm just looking for breakdowns, looking for signs of weakness. Just click, click, click. Visa, very weak price action, but you can see that it announces earnings after the close today. So I can't recommend that as a swing trade because it's got earnings. I don't short or go long any stock during the earnings announcement. I will trade it before the earnings announcement. I'll trade it after the earnings announcement, but I do not hold over the number. I feel that's too much of a crapshoot. Here we've got a nice formation. Caterpillar announced earnings before the open yesterday. You can see that it sold off the whole day. Now it has a failed breakout. That was the breakout right there. That should have been support. That's been violated. The stock is below the 50-day moving average. I think this sets up well for a short also. And you can see this upward sloping trend line right here that's also being tested. Take a look at the 5-minute chart. Yep, Caterpillar looks like an excellent short. There's your gap down, gets a tiny bounce at the market. It is following the market right in here, but I think Caterpillar sets up well as a short. See how easy it is to find these? I'm looking for really big volume and technical breakdowns, and I'm just clicking through these one by one to see what I like on a swing basis. And then once I have that on a swing trading basis, I know that I can find a good entry point for day trading, and I should have the wind at my back because the longer term trend is also low. You can see here that Apple has continued to slide, but Apple announces tomorrow. So I would avoid anything that's announcing today or tomorrow. You have plenty of other candidates to take a look at. Disney, very weak. You can see how it's testing the 200-day moving average, which is also a horizontal support level. If Disney closes below the 200-day moving average, it is a good short, and it's going to be a good overnight short as well. With the coronavirus spreading like mad right now, their theme parks are going to be closed, or at least they'll be at 25% of capacity. Very, very difficult for a company to make money when they can only operate at 25% occupancy or capacity when they have such astronomical fixed costs. So, I'm going to continue to take a look, see if we can find one more. I looked at Win earlier today. That's testing horizontal support. See what else we might have in here. Find one other for you. I think the Chinese stocks like Baidu, Alibaba, those JD, those are going to hold up relatively well because China's economy seems to be clicking on all cylinders right now. They've got 4.9% GDP growth. We are going to get a GDP number tomorrow. McDonald's, that's a pretty good breakdown there below the 50-day moving average. You can see how the stock is on its low of the day right now. You've got this upward sloping trend line right here that's been violated. McDonald's could also be a good short. If I took a look at the list of stocks that I've shown you, I believe that Caterpillar and Disney would be two of my favorite shorts for the day. There we go. You can see we're continuing to move lower right now, and I feel that the market is going to take out the low of the day, and I'm not sure where we'll finish, but I've outlined those support levels, so let me reiterate them one more time. Major support levels on the SPY come into play at 320, 318, and 312. Good luck with your trading, everyone. I hope you're on the sideline. I hope you've been taking my advice over the course of the last 2 weeks. If you're a swing trader, there are times when you have to be on the sidelines. We use a lot of leverage, and that means that when these hurts come, they come fast and they come hard and they're extremely painful. And that's why the best tactic is to simply be on the sidelines, to wait for that clarity, to let the market come in, and then once support is established, then we can start going in and we can start selling out of the money bullish put spreads. When we have those types of conditions, we also know that option implied volatilities are higher, so we can distance ourselves from the action and really increase our probability of success. If you like the content, please give it a thumbs up. Make sure to subscribe to this YouTube channel and turn on your notifications so that you never miss one of these videos. Good luck with your trading, everyone. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.